Hello, everybody. Kirk Spano, Monday Retirement Income Options. And the Seeking Alpha platform was down a little bit this morning, so I didn't get my article fully written. But we're going to go through a couple things that I think are pretty interesting. And I'll start with I've refined the screening process even further so that we can stick with our top ideas, which has been the mantra now for the last few months. Just stick with your best ideas, and that will usually do well for you. Some very interesting things going on with New Fortress Energy and Twitter. I'm going to try to crank out articles on both of those tonight, and probably a Metis tomorrow. If not tomorrow, probably Wednesday. I'm pretty busy tomorrow, so probably Wednesday for a Metis. Defensive plays are becoming overbought, and that usually precedes a significant market move up or down. Well, make sure you read the getting started pieces. So let's start by screening for cash secured puts. As you know, I do my screening over at TradingView. I just want to show you how I set these up. I use the oscillators. I move them around and I set them up like this. I just added industry because I wanted you to see some things. Go to this little button here, and we don't need to see the neutrals. We just want to see the buys and the strong buys for selling cash secured puts. What that means is that the multiple oscillators that TradingView has set up are showing that it's something is a buy or a strong buy. And then the next thing I do is I rank by RSI on the weekly time frame. So we use weekly because monthly is too long. That only matters a couple of times a decade. The weekly helps you with your intermediate time frame trading, daily and 4-hour and shorter periods if you're swing trading or day trading. So what we see here is that our old buddy PayPal is trading at 100. It's got a buy rating and it's super oversold. So we're going to end up selling some cash secured puts on that. I don't have that part of the article written yet, but you can expect PayPal in there. Some of the other companies are more speculative. Itron just keeps falling. So let's take a look and see if this is quite ready for us to get involved. You can see that it is at our bottom fishing price. Finally, because people ask, do I buy it now? Do I buy it now? Do I buy it now? Now it's double bottoming. So the question we need to ask is it going to break through to the downside? And I doubt it. Could it head down to around 30? It certainly could. I'll do a double check with Shooter, and I'm going to look into the company's sales because I know that the last time I looked, I wasn't 100% sure that I liked where their sales were, but I need to do a little bit more reading up before I commit to selling a cash secured put here. But Itron might be finally where we need it to be. Look at this huge level of support here. Holds there, holds there, holds there, held. Now let's see if it holds again and gets a bit of a rebound. I had looked at the Twitter feed today, and I found a pretty interesting chart. Somebody had charted out QQQ and showed that it was either going to bounce real heavy here or it was going to break through and show another leg down. And he didn't make an argument in either direction, but I think that a small rally here in QQQ for maybe the next few weeks is possible, if not likely. And then I think we do eventually get that other leg down. Once the Federal Reserve starts pulling the $95 billion a month out of the system, it's going to be really hard for these rallies to have much juice. And at some point, frustration sets in with investors who can't get liquidity to push markets higher, and they throw in the towel and they say, okay, let's just have the correction now. So I think that this summer we are definitely going to get that correction. Will it be a double bottom? Will we get it to crash, or not crash, but at least correct over the summer towards around 20% or maybe even 30% down in the QQQ? Always hard to know. My guess is yes, in that 20 to 30% down range from the highs. And then will it double bottom at the end of the year with tax loss selling and just general pessimism to set up a couple of big years at the end of the presidential cycle? Maybe. That seems to make a lot of sense to me, but we'll have to wait and see because the markets are difficult to predict, obviously, because what is the market's job? The market's job is to separate you from your money. So always be aware that everybody else is trying to take your money. So unexpected things happen. I'm going to check on Itron, see if it's worth putting back into our universe. I'm not really sure that it will be, but I'll check it out because this is a pretty strong support zone. If it's going to rally, I'd be looking for a big rally up towards 100. And the way that could happen is if their business is doing what I always thought it could do. I haven't read up on it in a while, so I will do the reading up. And that's why you use a screener, because it pulls things to your attention. Is there anything else really oversold? Not quite, but a lot of things are approaching oversold. Our good buddy Ford, which we've talked about lately. Who else? Qualcomm is always interesting because of the dividend, but I probably don't want that over 100. I have to take a look at my last chart. This is really, why is it so hard to use? There we go. Yeah, normally I don't want Qualcomm over, much above 100. So that's what we're looking for is can it break through this minor support up here and come down towards heavier support in here. And in fact, based on that, probably the bottom is about in the 90s somewhere. So that's when we'd start taking a look at that. Let's see, where is I guess that's support there too. Boy, I sure don't like the look of that at all. Yeah, I think that's where I'm more comfortable. It doesn't mean it's a horrible stock to buy at this level here. You can see the support. And if you got a huge premium, I guess, they gave you a net cost down around 110, 112. But I don't like the way those volume indicators look. Really looks like you get some heavy selling here and then enough selling to just keep on having it trickle down until it's 100-ish. What else is interesting to look at here? Home Depot, no. Pulte Homes, maybe. Let's take a look at Pulte Homes. Yeah, coming off a little bit. Let's see here. Where does it get really exhausted? It gets exhausted way down here. Could go. Where would the Fed step in? Probably. Yeah, I don't think it goes below 20. I'd have a hard time not buying it in the low 20s. Where do we run into that first level of support? That's pretty heavily supported there. Big selling, then maybe you get support there. All right, update that. Put that in the VSL. What else is on here? Nothing much, I think PayPal is the main one. I think we should be focusing on PayPal. So let's take a look at some options on PayPal and best ideas. So PayPal was well within our buy zone at this point. I'm really not sure why that keeps popping up. All right, we'll just do it that way. It's making me click an extra time. All right, so look at PayPal. Look at it, really just came off a cliff. That's a 70% drop. That's just monumental. I think that and that are probably going to prove to be the bottom right at about 100. Could it zip and then come through one more time, get all the way down here into the 70s? Sure could. I highly doubt it, but you never know. So I'm going to lower these just a little bit based on what we've seen. There you go. There's your new buy zone. We're in it. Could it get down into the 70s? It sure could. This red line is a measurement that I think we probably need to just always keep an eye on. Prices will often gravitate towards this red line, which you have measured here. Just a different standard deviation measure. But PayPal is something that we want to own long term. And this cannot be discounted as fantasy. It was a pretty long rally. Granted, it was during all the QE. And it's back down to where I sold it. I bought it at the IPO in the 30s, I believe it was. Sold it, between 70 and 100. Felt stupid. It broke through this top and this top. Yeah, the right price to buy it is in here somewhere. I don't think I quibble too much. I'll just scale in slowly and get a good average price in the 80s or 90s. I think the cash secured put you could sell right now. I look at June. Yeah. Depending on how conservative you want to be. You could probably sell the $90 for $450 or $5 right now. $450, that's 5% for a couple of months. That is a pretty good return. That's 60% annualized. And if you ended up with PayPal at $85.50, I don't think that should break your heart. If you wanted to sell another one down here, if these prices got up towards 5, that makes a lot of sense to me. So I'll talk about PayPal. All right, so let's take a look at covered call strike. We want to look at stocks rated sell or neutral. We want to rate by the RSI again on the weekly time frame. And I just want to look at this real quick. What you see is a lot of defensive stocks are in the overbought area. And that should tell you something. When defensive stocks are leading the market, that generally means that one of two things are going to happen. Either A, the market's going to have another leg down, or B, there's going to be a rotation back over to the growth side. I don't think we're ready for the rotation to the growth side, but we might get a head fake and we could get 5, 6, 7, 8% rally in QQQ and your other growth stocks. I think the small cap growth stocks are the ones that are the most attractive. They are the cheapest, as well as the easiest to push up in price with just a little bit of volume. So again, I just say, if you're going to accumulate things right now, probably those small cap growth stocks that we have and some of the mid caps. Interestingly, New Fortress Energy is showing up as almost overbought. I did write some covered calls on it too early, so I've had to rejigger my position. The article that I'm going to write will cover what I'm thinking with New Fortress Energy and what I'm doing. Right now, I have cash secured puts that I sold for June 35s, and I also had to roll some covered calls that I wrote way back when this was in the 20s. I wrote some $30 covered calls just as a way of collecting premium, thinking it'd be volatile, and then it broke out. So what I've done is I've rolled those forward and I've raised the covered call price to 35. Right now I'm watching the volatility, and what I'm hoping is that volatility pushes New Fortress Energy into the middle 30s. And I had that chart up here, killing me, Smalls. You see exhaustion is down around there. I think it probably has moved up, so that's why I have that price there. There you go. That's a pretty good move right on the natural gas tightness, and that's what we're learning, is that natural gas tightness in the markets is severe as the shift away from Russia occurs, and the United States basically is telling our allies, hey, we'll find the natural gas for you. New Fortress Energy is very well positioned for that, given that they can load the liquefied natural gas at sea at the wellhead, and I just think that they're going to keep getting contracts. So you want to definitely buy the dips on this one. I'm going to keep trying to roll my calls out because I want to hold this. I want to make this a full position, and there's going to be enough volatility that I think we can do it. But I do think that on the next bout of volatility down, that's going to precede pretty big market breakout to the upside. And this morning, excuse me, published the growth stock list. Fundamental Trends had it a couple of days ago. What I'm trying to do is find the chart, Shooter's Elliott wave chart. I'll show you how high he thinks it can go. So let me find this article. Okay. All right. One moment, please. All right. So this is a Shooter's Elliott wave chart. It's basically saying it could come all the way back down to 20, but probably not. 3307 looks like pretty strong support level. That's what he's pointing to. And that's where I actually just moved. I hadn't even noticed I coincided with him. His charts and my charts end up being pretty close. I'm doing it based on volume weighted things, and the Elliott wave is basically applying some time frame, not much time frame, but some patterns to how this all moves. I just eyeball these volume studies, and we end up in about the same place because it's just different ways of getting to the same thing. So he said that, it could get all the way down to 1920. Well, here you go. My bottom fishing is, 1920. And I think that low 30s is probably where I have to buy it. He's saying the same thing, 1920, low 30s. So that's what we want to try to do, is pull this when this comes down to get really involved, because the next run up, it'll be 2 runs up, could be pretty substantial. And he's looking at a price of 68, and then way up here at 100. That's a big run. I agree, but I actually think that because of the fundamentals of the company, because of what they do that nobody else is doing it, and really they're doing something that nobody else does by loading natural gas at the wellhead for LNG. Just think about that. I mean, there's literally hundreds of places in the ocean that they could be loading LNG, and they probably put a couple of their floaters in the middle of the Gulf and the North Sea and wherever else they're going to do it, and then they move them around. So the ability of New Fortress Energy to make money by loading LNG, right? By processing it and loading it at the wellhead in the water is just, it's so off the charts. I mean, I hope you can wrap your head around what a big idea that is. And they're doing it. They've got the contracts. They got some of them already operating. And they're at the very front end. They are in the first inning. When I brought this company to you, they were in batting practice. They're in the first inning now. The game started. I really think that New Fortress Energy is just going to grow and grow and grow. This is going to be one of the bigger natural gas or LNG companies out there. I mean, you think about Cheniere as the comparison. Cheniere had to build all that super expensive infrastructure down in Sabine Pass and elsewhere on the Gulf. These guys don't have to do that. You know, they can generate all those profits without having to have such a substantial capex outlay. And again, I'll point this out one more time. I've been beating you on the head with this one, which I don't do very often. The guys running this company are about as smart as you get. You know, Edens, Lazary, all these guys that are involved with this, super smart guys. So you need to be involved with New Fortress Energy. What I think we're going to want to do is when we get the next correction, we'll want to sell cash secured puts down in this middle 30s range. And hopefully we can, if you have written covered calls, you can buy them back in, because I think you want a full position on this. So that's what I'm working towards. Yeah, V came down $6 since last week when I said write covered calls. Bristol Myers appears to have peaked, showing a negative divergence here down on the RSI. We'll see if that follows through, goes up one more time. Shaken money flow is pretty much as big as it can get. You know, everything here is super overbought. I think Bristol Myers, I know that's a position that a lot of people like to hold, you know, kind of forever. I get it. But if you're not going to sell any, if you're not going to trim any, you really want to write some covered calls here with the idea as really heavy support. And let's suppose that that new platform they have is going to set a higher low. And it looks like it could be doing that, right? So this price in the 60 range might be as low as it goes. If there's a catastrophe, you know, maybe it gets down to 50. But right now, it's ahead of itself. I mean, that chart just says way ahead of itself. I could see it coming down to here pretty easy. So if you want to game some extra income, you know, sell some $80 covered calls and collect what you can. What else do we have here? Newmont. What I'm telling folks here is Newmont, you need to be trimming and you need to be selling covered calls on this. I want you to think about the gold market. It's a cyclical thing. We're getting the spike up now. Newmont's a member of the S&P 500, so when that comes down, Newmont will come down too. The chart disappeared again. I really don't like what it's doing there. Take a look at how much it spiked up. I had a target of around 100, so we're at 86 now. This seems like a pretty significant floor in here. Could be where it hits a whole bunch of support. This looks like where it would exhaust just a little higher on the bottom fishing. There you go. So what kind of cash secured put, what kind of cover call we want to write there? First off, I'd be selling 20 to 30% of that. No sweat. Everybody wants to chase, FOMO, but how does that usually end? I get tired of repeating myself just like everybody else does. So the June 90, get over $3 for it. Annualized, it's about a 36% return, right? 6 times 3%, about a 20% annualized return. If you sell the 90s for over $3, you could take less income, push your strike price further out. That gets you all the way up to my original target, which was $100 a share. So I think that that's pretty interesting. I'll write about both of those. What else do we got here? If you own Nutrien, I don't think there's any more any more covered calls to write. I just think you should sell Nutrien, flat out sell it. Or, you know, what you could do, if you want to try to game it a little bit, just get some time value, could go with a really long covered call and pretty deep into the money. Nutrien's at 116. If you wanted to write like a $21 covered call for 100, you're netting out $6 extra, right? What was it? 116 right now. So you lose that 16, but you sell this for 21 and change. So you're gaining $5 to $6 of time value. And if you're lucky, it comes down on a correction back under 100 and you don't get it called away. So I think that that's probably the play if you want to try to hold on to this. Like if you're trying to game long-term capital gains, right? If you don't want to sell it until later in the year. But the thing is, if it keeps running up, somebody will call this away sooner. But I think that you can probably game this a little bit. All right. And then Twitter. Let's finish with Twitter. I woke up this morning and I had sold $55 covered calls on half of my position, got $2 for them. It is fairly clear that Mr. Musk is very serious about owning Twitter, right? There's nothing but articles on this. He's going to do a tender offer if he has to, but I think what's going to happen here is one way or another, Twitter's getting bought. I don't think there's any doubt here. And it's going to get bought for above what Musk offered, either by Musk and a partner, because he's shopping for partners, or by somebody who just outbids him because they don't want him involved. But if you're somebody who wants to buy Twitter, and there's a couple of big hedge funds and private equity firms talking about it, if you want to buy Twitter, do you want Musk involved or not involved? You want him involved. Why? Because he gets so many people onto the platform. It's like having Howard Stern, right? Howard Stern got millions and millions of people to follow him. So he was worth something. Having Musk involved is worth something. So my guess is this. My guess that Musk is probably buying in the open market right now, that he's going to get right up to that 15% threshold before the poison pill kicks in. And then I think that there's going to be a deal between him, a private equity firm, or some other big institutional investor, and they're gonna buy Twitter. Now, do they take it 100% private? Maybe, maybe not. If they do, we just make a bunch of money on these shares. And if they simply flip the board, which I think is coming, this board doesn't have much life left to it. This board is dying, and they're all going to get kicked out except for one or two people. And Twitter is going to be run as a much more diversified entertainment, news, and social platform. It's going to become the things that Zuck had hoped that Facebook could become, but he let Facebook fall apart, and now he's going to get big time competition from Twitter, I think. And one of the things that's going to get fixed at Twitter is all these bots, all the electronic messenger systems and the Russian stuff that infiltrates over and over again. They're going to get rid of all the bots. The technology exists to do that. You just ban them outright. If you're not typing it in, it should get posted. And I think that that's what's coming. I think they're going to get rid of all the bots. They'll have partnerships with like TweetDeck or something like that, or Sendable, which I use. But you're not going to see the pollution and the propaganda on that site from automation. It's going to be, if Musk wants to say the world needs to be more libertarian, then he has to type it in and say the world has to be more libertarian. If Elizabeth Warren wants to put something up there, she types it in. And for the most part, those two are doing it that way, right? But you have all the automated bots that just pollute the streams. And that's going to be something that they have to get rid of. And Musk has talked about that. That's not free speech. That's something else. That's just trying to steal eyeballs with automated messages meant to inflame. So I think they're going to fix what's wrong with Twitter. And they, like I said, they already have entertainment deals. They have all the technology they need. They have a relationship. They used to have a relationship with Medium. I think you're going to see both long form, short form. I think Twitter's upside really is pretty big. So we'll see what happens here. But I've gotten very involved. I have a full position in Twitter now, right? A full position, which means right around 4%. My portfolio is in Twitter, and I've been selling puts, which I mentioned last week. I didn't put it in last week's article. I talked about it a couple of days later. So the puts that I think you can sell, I think at this point, probably looking to July, you can sell puts in this 41, 42 range. You're not going to get a ton for them, but they're volatile. But this is the price area where Musk was buying. So if he sold, if he gave up, could it come all the way back down here? For sure. But we've already established that there's more value in Twitter than this area. So if this is where you end up getting shares put to you, that's fine. I set my limit orders to buy at $45 a share the other day, and I got them. I also was able to sell some June 41s. And then this morning I woke up and I had sold $55 covered calls on half of the position. at $2. So I have this on both sides. If it goes down to that 41 area, I'll end up getting puts put to me, and that'll drag my cost basis from 45 down to about 42. And if it goes up to 55, I automatically sell half of my shares, presuming it stays above 55. And then anything above that can run. I think Twitter's going to get bought out for around 70. That's where it's still a value. That's where Prince Alaweed sounds like he'd be willing. That's where another major shareholder was posting that, Musk has to talk about 60. We value it at $69 a share is what the other guy was saying. He owns like 5% of the company. So you have some big shareholders, Alaweed at 14%, Vanguard has pumped up their position in Twitter to 10% of the company, which remember, most of that is indexing, but they have some managed funds, and they're pouring Twitter into their managed funds. For Vanguard to do that is interesting. Those guys at was it Wellington, I think is the name of that fund. They have two funds, Wesley and Wellington. One of them is a stock fund. The other one's a balanced fund, and they're good stock pickers. So I peek in what they're buying every now and then because they have insights from the indexing. Same way that BlackRock does. BlackRock gets insights on money flows from the iShares inflows, so they can use their own data to know where things are going. It's the same sort of data, except more sophisticated as this. It's very similar to these studies on the left-hand side of my chart that I use, just, more real time. So I really think you should get involved with Twitter if you're just interested in making money. I don't care what you think about the company, right? You can have your feelings. I know your feelings matter, but if you're in this for making money, Twitter is something that you should be involved with. And the volatility is pretty high. So at minimum, sell those puts down at a price where you'd be okay owning it, which should be 40-ish, 41-ish, 42-ish. And then if you get a couple of hours that are down or a day that's down, just have your good till cancel order set. I think it's pretty easy to set a good till cancel order at 45 like I did. And just on the movement in the stock, it'll get put to you. Let me show you the chart real quick. I don't know that we care about any of this. It just shows daily chart. It's really moving around, right? I mean, this stock has really been moving around. So here was Musk accumulating, started to push it up. Now everybody knows, so it's going nuts. Take a look at the 4 hour. All that correction, Musk starts to buy it, and now the stock is in play. And how much is it going to move? Who knows? But you're getting some volatility, right? This is right where it hit me. Could it come down again to 45? It could. But I do think for sure, right about 45, right? Held, then got back through, held, sniffed underneath, but basically held. That 45 is a pretty good support zone here recently. I think you could even put your limit orders in at 46 because this might hold now. We'll see. Put in limit orders at 46, 45, and then sell some cash secured puts down at 41. This is getting bought out, folks. One way or another, it's getting bought out in the next year. So keep an eye on this. I think you should own it. And I'll write that full article tonight so that it's an official buy recommendation. All right, what kind of questions do we have? What are the right keywords for NFE technology? Just go to New Fortress's Energy. If you want to learn about New Fortress Energy or any company, go to their website. Somebody points out that Satellogic is not on the VSL. You're right. Must have got taken out on accident. Yeah, Satellogic is in that basket of satellite stocks. I'll whip up an update on the satellite basket too. As always, these videos are posted on YouTube. And yeah, I did take Itron off of the VSL. It's one of those fringe companies. Like I said, if they start to make sales the way that they should have been making sales, then I can add them back. But that's what I mean. I mean, the screen tells me that it's oversold. It's a company that I'm watching, right? The company I'm watching, the oscillators say to buy it. Maybe I'll trade it at fundamental trends or something. But if all of a sudden they're starting to make sales, if I look at the company and they've got a whole bunch of contracts that haven't been reported quarterly yet, but we know that there's contracts, which means that in 3 months or 6 months, there's going to be earnings, right? That's how you learn. So this is telling me, hey, take a look at this one again. So got there really quick. So we'll take a look. All right, let me get this article written. I'll get it out soon. And I'm going to have a bunch of little short articles on the things that I'm buying and what I own here. All right, have a good day.